Welcome back to Primary Source China Investment. This is show Y5, and we're talking a little bit about fixed income because the takes on China equity are everywhere, everything, all at once. And what everybody except us is saying again now is the same thing they said at the beginning of last year, and they're just ready to run it back. So as we sit here, ASHR, the proxy for the CSI 300 traded in US dollars in the US, and broader China, MCHI, are both down a lot over the last 2 years. Let's call it 37% over the last 2 years. As we like to say, that's a lot of wood to chop to get back. But if we compare that to CBON, really the only fixed income proxy ETF for US investors, that's down about 10% on price, but you did get about 3% in yield annually. So yeah, that's a Pyrrhic victory, no doubt, but the fixed income component did do one thing right. It did protect you from that massive downside loss. The question now is what's going forward for China fixed income? So we know property sucks all the oxygen out of the room. And for 2024, that's going to just be more because projects are still getting refinanced, collapsing, or otherwise finding buyers. And banks are repackaging loans in what can only be described as securitization of the worst. Bank debts reorganized by banks are up more than a third from 2019, and it's going to get worse before it gets better. So Peng Guo, as we sit here right now, before we get into some specific numbers, what's your thoughts on China fixed income right now? And there's probably a FX component in there as well.
Yeah, I think we're still back to the most basic concept, risk on or risk off. We are still on the risk off period. So obviously fixed income is the same in the market. It shows in two areas. One is all the market vendor or the participants, they have a much more demand for the fixed income related service. I mean, from data service, whatever, the fixed income product, and also fixed income regulation, or even the investors put the resource, like the fund companies put the resource in the fixed income area, they all get increased. Our asset allocation index monitor the entire market of fixed income. For the last year, the fixed income related asset allocation index increased about 4-5%, much better than the CBON. So it used to be like the 5 years treasury bond index and 10 years treasury bond index in the market. That's the most popular one. But right now you can see like the short term, close to the money market bond index, 5 years local government bond index, 10 years local government bond index, and also you will see urban construction bond index, and also high-grade corporate bond index. So you will see more and more product in this market.
Yeah.
That means the investor get more interest in this area.
So looking at that from the local investor versus the foreign investor, the local investor has a lot of options. Maybe they're looking at products with less duration, but if you look across the board and compare China onshore rates with US rates, this is where the US investor is saying, look, this is just not attractive because yields on US debt are much better. Start with the 10-year government bond rate, 4% for the US, 2.6 for China. China's investment grade corporates yield about 3, and US investment grade yields about 5.26. So it's just a very difficult to get foreign investors excited about renminbi denominated fixed income. But of course, on the mainland,
that's definitely a good point.
Yeah.
Plus the exchange rate or exchange return, the things could be totally different.
And that's the other thing, right? When the currency is more volatile than the return. I think that's the simple way to say it.
That's true.
But if you're an allocator, and again, these are the people we're talking to. If you're an allocator to China, you should absolutely be buying some percentage of China fixed income to pair with your equity exposure. And we've been saying this for a long, long time. And you just look, even though CBON is not great, if you're an allocator, you over the last 2 years, you either lost 37% or you lost 25%. I mean, it's much better to be down 25% just on a 60-40 allocation, right? So if you're allocating to China, you should absolutely be allocating to CBON or another fixed income proxy because of that downside volatility. What's your thoughts on that, Peng Guo?
That's absolutely right. Our data proved this point. We have 20%, 40%, 60%, 80% bond and equity asset allocation index. All of them, we still track the uptrend of the both area. So in this kind of the situation, we find out that consistently, like the 40% bond, 60% of equity, or 60% of equity, 40% of bond, they mixed together, and they get the highest Sharpe ratio. So this is definitely the return also looks reasonable
That's a
compared
great point.
to purely bond or equity index. So
That's a
I
great
think
point.
that's really proved your idea.
Yeah, the final thing I wanted to talk about is, like we said, property sucks all the oxygen out of the room. It makes headlines. It's big, has a huge impact. But if you look at the top holdings of CBON, I mean, I'm not selling CBON. I don't get any
That's
kickback from
true.
Van Eck, but it's really the only product out there. If you look at the top holdings, you will see China National Petroleum, Shandong High Speed, State Grid, China. None of those are property related. So you're holding large SOEs. You are not facing those huge property risks that are still going through the proverbial pig through the python.
Yeah, that's true.
Yeah,
Yeah. And even in the equity area, people talk about the convertible bond index, high dividend index, or plus some kind of the fixed income features added to those area. Yeah, that's a pretty natural ways for people to handle the downside risk. But for
right.
us, we just purely just get out of the downsides.
It's really just keep it simple. I think for allocators, they need to keep it simple. Just get your 60-40. I know that was all beat up early in 2023, but it all came back and seems to do pretty well. For China specifically, if you are an allocator, you need to keep a piece of fixed income in the portfolio. And with that, we're going to leave it with show Y5. Thanks for tuning in, and we'll see you next week. Happy New Year.
Happy New Year to everyone. Thank you.